Now, I want to go back to the page before. I told you that we were going to get into employee benefits. Let's dig into that a little bit harder right now because there's quite a few things in here that you may receive as an employee of a company that the IRS has said, you know what, we're not going to make you consider that income. So what are those? Well, we'll start off with insurance. Make sure and read this closely in the chapter because there's some conditions in here, but for the most part, you are receiving a monetary value of benefits that your employer pays for. So the employer pays the premium on your health or life insurance. That isn't considered income to you. What we call no additional cost benefits. So if I'm running a hotel and you come to me and say, hey, Mr. Trucks, I've got an anniversary coming up. Can I stay in the really nice suite that you've got upstairs? And I say, yes, that's fine. You're an employee. We will comp that room for you. Or we work in a restaurant and you say, I want to bring my family in for dinner. And I say, that's fine. Your dinner's on me. Those are what we call no additional cost benefits. They're not really costing me hardly anything extra. When I'm giving them to you on an occasional basis, we're not going to consider that something that you've received as earnings that you should be paying taxes on. Employee discounts. There are a lot of places in the world that will offer you a discount on whatever your employer sells, whether it's a service, whether it's a product. According to the IRS, we're not going to consider that discount amount as an earnings for you that you have to pay taxes on. Next one up is what we call work condition benefits. And those are things that the company may spend money on to help you grow as an employee, but those aren't going to be considered earnings on your part. Let's say that you are a manager in a human resources department and the company decides that it would really benefit you and the company if you were a member of the National Human Resources Management Association and they pay your dues and fees for that. You aren't going to be responsible for that even though you are benefiting from it. Next one up is one that honestly I have trouble pronouncing, so I'm not going to say it here. Basically, it means the little stuff. If you are working at an office and the company pays for your coffee in the coffee machine, it's too little to get into. So the IRS says, no, we're not going to count those little things. Now, if you work for a company and they decide that they want to give you a brand new Lamborghini, yeah, that's not a little thing. We're talking little things here that you personally benefit for. Speaking of Lamborghinis, companies in the IRS are allowed to reimburse you, as of right now, up to $270 a month to offset transportation. That could be paying to get you into work. It could be that you work in a really dense area like downtown, and they're going to cover your parking for you as a benefit. So all of those added together add up to they can pay you or they can benefit you up to $270 a month. Athletic facilities. There are a lot of businesses nowadays that will open their own company gym and you can use it for free. They may still charge other people for it, but for you as an employee, they're not going to charge you. The trick here is that the facility has to be owned by the employer. And let's also throw in job-related education and training. That kind of ties back a little bit to the one that we looked at just a little bit ago called work condition benefits. It's going to benefit an employer if the employee gets additional training, becomes more developed and skilled at their job responsibilities. So you may be benefiting from this additional education, but you don't have to consider that an earning that you'll have to pay income tax on. So another one is what we call employee awards. These are company thank yous. They're small things relatively. You could have worked at the company for 25 years and they're giving you a gold watch. Something along those lines. Once again, if they're giving you a Lamborghini or a Ferrari, that's not going to fall under employee awards. These are basically a way to say thank you that are relatively small amounts. Meals and lodging on company property. You know that I used to be in the hotel business. We used to have times where the weather would get really bad, so employees would say, "We don't have a full house tonight. Can we stay in one of the rooms instead of driving home and taking a chance on not being able to get back tomorrow because the weather's bad?" Yes, that's fine, as long as it's on company-owned property. The IRS isn't going to consider that earnings. Employee death benefits. It is somewhat common, though not quite as much as it used to be, that if you go to work for a company and stay there for a period of time, let's say a year, then one of the benefits that will be added into your employment package is that you may receive a $25,000 life insurance payout, let's say, on the off chance that you pass away while you're working at the company. Now, this doesn't mean that you have to pass away as a result of working for the company. It gets paid regardless if you are working for the company and die during that employment period. Dependent care. This is a big thing in today's society, is being able to have child care or dependent care for older adults, maybe your parents, who need daycare. Couple things to keep in mind. If your employer reimburses you in cash for these expenses, then that's not going to be considered excluded. You'll have to pay taxes on this. But if this is something that the company pays directly, perhaps they operate a daycare center, or perhaps they have agreed that they will cut a check directly to a company that does your daycare. That's up to $5,000 per year. There's also some other conditions in there, so make sure and check those out in your book. Adoption expenses paid by the company. Keep in mind that with all of these employee fringe benefits, the purpose of them is to be able to recruit and retain employees and keep employees permanently. So one of the things that the IRS has said is if a company is willing to pay for some of the adoption expenses, if you've made the decision to adopt children, that's not dogs, that's actual children, then you do not have to consider that as earnings that you would have to pay income tax for on your side. Educational expenses, that kind of goes back to what we were talking about before, except before we were talking about education and training to specifically do your job better. This is what's commonly known as tuition reimbursement. And this is a big deal nowadays. There are a lot of companies, Starbucks for example, that if you go to work for Starbucks, they will pay for your college up to a certain amount as long as you meet certain requirements. You personally are benefiting out of that. Isn't that income for you? No, the IRS has agreed that you are not going to have to be responsible for paying taxes on that. Cafeteria plans. We're going to get into this quite a bit more later. No, this is not putting a cafeteria in your office so that you can go eat lunch there. Cafeteria plans are a name for a group of savings accounts that the IRS has said that if the employer formally sets one of these up and then contributes into it, or you are able to contribute into it and then draw money out later to help you with things, let's say, for health insurance. None of the funds that come out of that cafeteria plan are going to be considered taxable. The IRS has decided that they will be excluded from your earnings. Okay, so that's it for the benefit stuff. And that's it for the entire chapter. As always, let me know if you have any questions. You know where I'm at. You know where to find me. Good luck with Chapter 4. We're doing well. We're getting close to maybe halfway through the chapters. So let me know. Bye.